Let's turn now to some business news, and analysts expect another choppy week as the Fed Chairman Jerome Powell appears before congressional committees for 3 straight days, discussing the response to the COVID pandemic and questions about the broader state of the economy and fiscal stimulus expected to abound. Meanwhile, after a week that saw the S&P 500 and Nasdaq both end down for the third week in a row, buyers looking for bargains may be eyeing the tech industries. But what's also making headlines this Monday? A banking scandal that has prompted already the sell-off of HSBC and Standard Chartered shares in Hong Kong. HSBC shares falling as much as 4.4% in early trading to its lowest level since May of 1995. Standard Chartered dropping as much as 3.8%. You can see there the global picture across the main indexes in Asia. The Hang Seng, as you can see there, it is in the red, down almost 1 percentage point. Shanghai Composite and the Kospi and Seoul also into the red. Though not quite as dramatically, and the Nikkei in Tokyo closed for trading. Well, we can cross now to head market strategist for Asia Pacific at Axie Trader, Stephen Innes. Stephen, firstly, that news coming out that HSBC, Standard Chartered and a number of other banks have been moving large amounts of allegedly illicit money, despite some red flags, up to $2 trillion worth. What more can you tell us about that?
It's probably one of the worst things that can happen in the banking sector is when you get your hands caught in the proverbial money laundering cookie jar. This is really, really bad stuff here. Not only is it going to ruin the reputation of the bank globally, but particularly in China, where they do a lot of business. If they get put on the blacklist there, where are they going to be doing business? This is the problem. This is HSBC Bank that does a lot of business via Hong Kong. They're already suffering because of some issues they've had not paying dividends this year to some of their big investors in Asia. And this is a problem. This is going to weigh definitely on sentiment going forward.
Meanwhile, Stephen, in perhaps more positive business news, a deal being struck between Oracle and TikTok. It finally gets the go-ahead from the US. Is that now the end of the controversy and an economic boom?
I don't think so. I think, this U.S.-China fracas is going to go on forever. It's going to boil down to really who gets into the White House. Obviously, if Trump gets back in, there's going to be more pressure on China. Even if Biden gets in, we still think there's going to be more pressure. It's just going to be more predictable because Trump's a little bit of a wild card. But we think the pressure is going to continue mounting on China. Sort of one of these 2 steps back, 1 step forward in the relationship. I think there's a laundry list of intellectual property right fracases that they're going to continue leveling on China, and this is just the beginning, not the end of these squabbles.
Stephen, finally, what other things do you think we should be keeping an eye out as we begin the week?
We started off with COVID in the UK. I think that's going to be an issue going forward. We just have to always look at that issue. And I think Fed speak this week for some clarity on what the Fed policy statement was all about. And we'll see where we go from there.
Okay, Stephen Innes from Axie Trader. Appreciated as always.